Hello, friends. I'm back reporting on how my data analysis project went, and unsurprisingly, I really enjoyed it. I asked two questions. The questions were, is a large difference in the daily range, the difference between the high and low prices for the day, good for Tesla closing prices? I also asked, is a high trading volume good for the closing prices of Tesla stock? And while I gave answers there, the it I think flows a little better if I go into the full explanation. I first started off by downloading raw stock prices just from the NASDAQ, easily available and available to follow in my links page right here. And then from there, I had to clean it up. I first made sure that I needed to remove the $sign because that caused it to get formatted as text. And from there, I didn't do anything with it yet, but I did make sure I could get, other than tracking when things occurred, I did make sure to get the date formatted as date, got the volume, because it was such a large number, formatted to int 64, oftentimes upwards of like a billion trades per day. And then from there, saved it to a clean data CSV file, making sure the encoding was forced in a proper area, and then simply described it. This is just raw statistics. This is actually stored as a dictionary. All of these variables are able to be accessed as a dictionary. And then from there, while it was cleaned and ready to use, it wasn't prepped for all the questions I wanted to be prepared to ask. Ultimately, some of the things I plan on going into is there a difference in the days? Is there a difference in the months? Is there a difference in the weeks? Is there a difference in the quarters and the day of the year? There's a ton of questions I ultimately plan on asking. And then from there, I again just describe the data. Wonderful little tool there. And took a look at what it had. From there, I created a visualization going and showing how the close price worked, the open, the apparently for somehow I got open in here twice. I'll have to fix that. And then the low price, volume, daily range, high, low, average. And from there, I again summarize the data. I have specifically wanting to get the unique values in the data. So this was in part to see how often are there patterns, and not surprisingly, there wasn't any repeated values in the volume. But the closing price repeated several times, as did the open and the high and the low. And daily range, that was an incredibly close-knit value. And from there, this is functions that I use because I realized these were things I was going to be using multiple times. And so I built functions to allow them to be reused. And while I could have just pulled this data out simply by referencing these very same things, I, I wanted to have an easier way to remember what they were. And so I just pulled them out and pre-assigned them to a variable, which made it for me easier to access. And so that was more valuable to me, even though it was technically less efficient. And then this, again, is a summary of the uh, data specifically for the daily range. And from there, just described it using statistical terms. I've previously taken a statistics class. It was actually a lot of fun. And then I created a histogram wanting to see the range. I just ended up, I played a little around with a lot of numbers, ultimately settling on 100. And that let me see just how close and tight knit the data is for the gaps between the daily range. It's often really close and very rare. I mean, you get a blip here, a blip there, and a couple of blips in here, and but other than that, everything is really, really close over, and very little gap between the opening and closing prices. And then I did some comparisons, and this was to kind of give a, because this took, and using those functions up above, I took and found, okay, how often was there a difference in the fourth quartile, uh, and it gained a huge difference in the fourth quartile for the prices, and it gained value. How often did it lose value? In this case, it actually pretty much was dead on even. You get a little bit of a gap here and then a little bit more of a gap here. And when I did a correlation check, it showed a very, very weak positive correlation. And that slowly grew to pretty significant correlation, which suggests that there is some kind of connection. However, it's important to realize that what I did here isn't really reproducible in a real life scenario. I took the difference between the high and the low and said, is the closing price reproducible? Is the closing price prone to go up? And if you stay close, if you stay like in this area, then it's a really strong connection. But once you start getting into these areas, it gets closer and closer to 50%. I didn't run a test for what it is outside of this. That might be for a future run, but in the end, I found, yes, there was a connection of some kind. More data needs to be gathered. I just found this really interesting to do. And then I went into the analysis on high trading volume. Is that good for closing prices? And from there, same thing here, signed it all to, did a description, signed it all to variables to make it easy accessible, and then printed out the difference. And I went ahead and did this just because, even though I realized there wasn't going to be any duplicate values, but the mode is everything because there is no repeated values. And then from there, did a histogram, and like the other, the volume is very heavily focused towards the uh, first quartile, there's just not as much uh, of a stacking of data. This is a lot more dispersed. It's still very heavily focused over to the other. I mean, this range here is just 200, and we're talking maybe 300. We're talking 2,500 data points, and the largest one you get is 300. That's still a lot of stacking, but it's a lot more dispersed. And then from there, broke out the results, and this had a very, very weak negative correlation. And in this case, it grew slightly the further you get from this clump here. So out here, it's more of a negative, but not enough to really tell you a whole lot just because of how close that is to zero. And but if you just go off of it, then yes, there is something, but there's definitely other factors in play. And that is my analysis. And thank you very much, and have a wonderful day.